Good afternoon, class. You are welcome to PLBC Virtual Classroom Simulation. I am Mubarak Musa from Hassan Usman Personal Polytechnic. Today we are going to learn financial accounting. In our previous class, we've laid the foundation of what a company is. Today in our class, we are going to learn issuance of shares. From the word issuance of shares, it means when the board of directors decide to invite the public to come and subscribe to their shares. Like we said in our previous class, shares is the smallest unit of the entire worth of a business. We said companies divide the entire worth of the capital of such business into different units so that the members of the public can subscribe. What we are going to learn here is how do you post such entries as an accountant? As an accountant, you are required whenever the board of directors decide to invite the public to come and buy their shares, you are required to post the entries. Before we look at the first illustration, we quickly explain the three methods in which companies issue their shares to the public. First, they can issue their shares at what we call at par. Two, they can issue it at discount. Three, they can issue it at premium. So again, the board of directors can decide to invite the members of the public to come and subscribe, to come and buy the shares of such company. They can either sell the shares at par, or at discount, or at premium. What do we mean by the word at par? Let's say, for example, the value of the shares, or the nominal value of the shares of the company is 1 naira. Let's say, for example, the value of the share of the company is 1 naira. So if the board of directors decide to sell the shares at 1 naira, then they are selling it at what we call at par, meaning the nominal value is equal to the what? Market price. The value of the shares is 1 naira. The board of directors decide to sell it at 1 naira. It means the price are what? The simple. The nominal value is equal to the market price. If the board of directors decide to sell these shares, instead of 1 naira, they decide to sell it at 0.8 kobo. We could see that the value the board of directors decide to sell is lower than the nominal value. So in scenarios where we have the value of the shares, the market price of the shares is lower than the value of the nominal value of the shares, we call it selling at discount. And in most cases, what usually encourage board of directors to sell their shares at discount is to invite the members of the public. Maybe the company is new, they are trying to invite to get more shareholders, so they might decide to sell it at discount. However, based on Companies and Allied Matters Act of 2004, it is forbidden or it is illegal now to sell your shares at discount. It is no more applicable. It is illegal for the board of directors to decide to sell their shares at a price lower than the nominal value. It is illegal. Now, when we say selling shares at premium, like we said, maybe the value of the shares is 1 naira, and the board of directors decide to sell it at maybe 1 naira 50 kobo. We could see that the nominal value is 1 naira, while the board of directors have decided to sell it at 1 naira 50 kobo. It is higher than the nominal value. Then we said in such scenario, the board of directors are selling the shares at premium. The market price is higher than what? Nominal price. In this case, the market price is higher than the nominal price by 50 kobo. And what usually encourage directors to sell your shares at premium is maybe you have big companies like Dangote Cement PLC, we have MTN Nigeria. These are established companies with good reputation for making profit. So the board of directors decided to say we want to sell our shares at a price higher than the nominal value. Why? Because they believe that, or they know that the members of the public will definitely subscribe, because such companies have established a good reputation of making profit. Now, as an accountant, what we are interested in is how do you post the entries whenever the board of directors have decided to sell their shares to the members of the public. Now, to illustrate how we are required to post the entries, we have a very good example here. We have NACOA PLC has a total authorized share capital of 1 million naira ordinary shares of 1 naira each. The directors of the company made available 60% of the shares at par, payable in full on application. Required, show the necessary accounting entries for this transaction. So again, we are going to repeat the question. NACOA PLC has a total authorized share capital of 1 million naira ordinary shares of 1 naira each. The directors of the company made available 60% of the shares at par, payable in full on applications. Required, show the necessary accounting entries for these transactions. Now, virtually are required to prepare 3 accounts. You are going to prepare, or you are going to open the bank account. You are going to open the application account. Since we said on application, and likewise I want to open ordinary share capital account. And finally, you extract a balance sheet. Why are we required to open a bank account? Because we are going to make payments through the bank. We are going to receive the money through the bank. Why I want to open an application account? Because they said payable in full on application. Why I want to open an ordinary share capital account? Because we are selling ordinary shares to the members of the public. And likewise, we are required to extract a balance sheet to show us the statement of the financial position of NACOA PLC. So this is the suggested solution. So we said first we know that we have NACOA PLC has authorized share capital of 1 million naira. 2, NACOA PLC, or the board of directors of NACOA PLC, have decided to make available 60% of these shares. So it means the issued share will be 60% of this 1 million naira ordinary shares. So it will be 60% of 1 million naira. And this will give us 600,000 shares. 3, what is the nominal value of these ordinary shares? We said it's 1 naira each. And likewise, we are told that the board of directors decided to sell the shares at par. Now, earlier on, I said when the board of directors decide to sell your shares at par, it means the nominal value is equal to what? The market price. The nominal value is equal to what? The market price. So it means the market price of such shares will be what? 1 naira. Since they said they are selling the shares at par. Now, the next step is for us to show the accounting entries. We said we are required to open a bank account. You open a T account. debit side, credit side, you have your bank account, you have your Naira sign, you have your Naira sign. We said we are going to open application account. We have debit side, we have credit side, we have application account. Don't forget your Naira sign. Then likewise we said we are going to open an ordinary share capital account. You have your debit side, you have your credit side, you have the ordinary share capital account. And don't forget your Naira sign, your Naira sign. After we are through with everything, we will extract our balance sheet. Let's make this a bit bigger. The first step now is for us to post the entries. Now, since it's an application, it means money is going out. And when money is going out, we come to the credit side of the account. When you are receiving money, we definitely know we debit the account. And when money is going out, we credit the account. So we'll write, we are paying for the bank, so we'll write bank. 1 Naira at 600,000 shares. This will give us 600,000 Naira. For every credit entry, you go to the corresponding account and you debit it. Our bank account is receiving, so we'll write application. 1 Naira at 600,000 shares. This will give us 600,000 Naira. The next step is to come to our ordinary share capital account. We are buying or we are selling the ordinary share capital. A capital is being treated as a liability and all capital accounts are being credited. So we'll write application here. £1 at 600,000. This will give us 600,000 Naira. That will come to the corresponding account of the application. We'll write ordinary share. We have 1 Naira at 600,000, and this will give us 600,000 Naira. That is all for the entries. The next step is for us to balance the account. For example, for application account, it is already balanced. We have 600,000 on the credit side. We have 600,000 on the debit side. It is balanced. The next account for us to balance is the bank account. In our debit side, we have 600,000. On our credit side, we have nil. So we'll write balance CD. How much? 600,000. By the time you write this amount, the account will balance. For every balance carried down, there must be a balance brought down on the corresponding side. So a balance BD. 600,000. The next account for us to balance is the ordinary share capital account. On the credit side, we have 600,000. On the debit side, we have nil. So we'll write balance CD 600,000. For For every balance carried down, there must be a corresponding balance brought down. I'll write a balance BD 600,000. We are through with the balancing of the account. The next step is for us to extract a balance sheet. On the current asset here, we have the asset side, and in this question we have a current asset, which is the bank account. And how much is the balance in the bank account? We have 600,000. While on the right hand side of the balance sheet, we have authorized capital. Of 1 million shares at 1 naira each. This will give us 1 million. Then we have the issued and fully paid, which is of 600,000 shares at 1 naira. Issued and fully paid capital of 600,000 shares at 1 naira. This will give us 600,000. And we will see that our balance sheet has balance. We have 600,000 here, and on this side we also have 600,000. So these are the entries required if you sell your shares at par. First, you open a bank account, you open an application account, you open an ordinary share capital account. We're opening a bank account because we'll be receiving the payment through an application account because the shares were sold on application. Then the reason why we open the ordinary share capital account because we are selling the ordinary share capital account. After you have debited and credited the required transactions, finally you extract a balance sheet. On this side, you write the current asset, which is the bank, 600,000. On this side, you write the capital. You write the authorized capital, even though it will not form part of the calculation. Then likewise, you write the issued, meaning the shares, the capital that was sold to the public and fully paid of 600,000 shares at 1 naira each. This will give us 600,000. And we could see that the balance sheet has balance. Now, this is a transaction that the shares were sold on at par, meaning the nominal value was the same with the market price. What about in a situation we have the board of directors decided to sell their shares at premium? Don't forget earlier on I said you are not, the law does not permit you to sell your shares at discount. The law has forbidden that. What is only required of you is either you sell it at par or you sell it at premium. Now let's say for example in this example we saw, we decided to sell the shares at premium. Maybe we decided to sell it at 1 naira 20 kobo. In the question we are told that the authorized share capital is worth 1 naira each. Now, let's say for example, the board of directors, instead of going to sell it at par, they sold it at 1 naira 20 kobo each. So it means the price they decided to sell it is higher than the nominal value. It means they are selling it at a premium. Now, when you are selling it at a premium, this will be the accounting entries. First, we said the application account. You have bank. You have 1 naira 20 kobo at 600,000. And by the time you multiply 1 naira 20 kobo by 600,000, it will give you 720,000. You come to the corresponding account, which is a bank account. You write application. At 1 naira 20 kobo at 600,000 shares. This will give us 720,000 naira. Now, for the ordinary shares, you have application here. Now, you will not write at the 1 naira 20 kobo, but rather you write at the nominal value, which is 1 naira at 600,000. This will give us 600,000. You come to the application account to write the corresponding entry. You write ordinary shares. ₦1 at 600,000. This will give us 600,000 naira. Now the remaining balance will be what we call a share premium. And what's the share premium? This 20 kobo, 0.2 multiplied by 600,000. 0.2 multiplied by 600,000 will give you 720. To give you 120,000. Now, since we have a share premium here, it means we need an additional account of a share. We call a share premium account. This share premium account was prepared because you have decided to sell your shares at a price higher than the nominal value. We have debited application account here. It means we'll come to the share premium and credit it. We'll write application. We have 0.2 at 600,000 shares, and this will give us 120,000 naira. Should not forget our naira sign, Now finally, it's for us to balance the account. For application account, it is balanced 600,000 plus 120, 720,000. 720,000. For our bank account, here we write the balance CD 720. For every balance CD, there must be a corresponding balance BD 720,000. Then we'll balance our ordinary share capital account, balance CD 600,000. And we have balance BD 600,000. Ordinary share capital account is balanced. Then we have, lastly, our share premium account. We have balance CD 120,000 and a balance BD 120,000. And finally, we will come and extract our balance sheet. For the current asset, we have bank 720,000. Here we've written the authorized capital of 1 million, and we have issued and fully paid capital of 1 naira each at 600,000 shares. This will give us 600,000. Then we also have share premium. And how much is the share premium? 120,000. By the time you add 600,000 plus 120, 720,000. 720,000. So we could see our balance sheet has now balanced. We have 720 here, we have 720 here. Now, in a nutshell, we've learned how companies issue their shares. They might decide to issue it at par, meaning at the same price with the nominal value. They can issue it at discount, but we said it is legally forbidden. Then they can sell their shares at premium, meaning they can sell their shares higher than the nominal value. We've seen the accounting entries when they sell their shares at par, and likewise we've seen the example when they decide to sell their shares at premium. The only difference is that you're going to have a share premium account when you sell your shares at premium. And this brings us to the end of today's lesson. To meet in our next class. Thank you.